Value added tax, or VAT to you and me. Can you claim it back as a property investor? Well, that is answered in this video. I think what that does lend itself is what can you claim back on VAT? If let's say that you've done a refurb, you've spent £10,000 excluding VAT, £2,000 therefore is VAT. Can you claim it back?
No.
For residential on rent? Why?
No, because it's just not allowed, Simon. Stop trying to bend the rules just because you want to. Hashtag Simon for president. So, unfortunately, in very many cases, if you have incurred VAT on labour and materials when you're repairing, replacing, renewing, to use Simon's phraseology, then although you can add the VAT into your expense, so in Simon's example, let's say it was the £10,000, but you've actually got £12,000 of cost, as simple numbers for a second, 2,000 of which is VAT, which I appreciate isn't quite the way it works, but let's just summarise it for simplicity. Then you can put in your expenses that £12,000. That will be the amount you can reduce your profit by, on which you then charge tax. So you're not losing out. It's just you're not claiming it as fast back, perhaps, as you might, had you been VAT registered and had it been a possibility to claim it. There are, however, examples when you can, aren't there, Simon?
Well, it's sometimes when you are, it depends if you're a property developer. So sometimes you could have a property that you're making residential for the first time, so a commercial to residential, for instance, and then you sell that asset on. That transaction, when you sell the asset, becomes a 0% VAT item, and therefore you can claim back the VAT. Additionally, you could be doing build to rent or creating a building for the first time that's residential. And the tradespeople that are building that construction for you would charge you at 0%. So if you're doing a principal contractor route, then they would do their entire property and not charge you any VAT at all. But that, of course, is where you are doing this VAT 0% rate of creating something new. But let's imagine that you've got a property that is empty, in probate, boarded up. And if it's boarded up, I rather suspect that you'll be able to buy that property, which is here's a catchphrase. You ready for it? Below market value. Have you heard of that phrase before? BMV.
Sorry, people.
I'm sure that's been sprayed all over YouTube at some stage. Below market value. I am quite sarcastic when it comes to below market value. There's another video coming about that. But in this case, let's imagine that you have got some properties being boarded up, empty for a good period of time.
How much time?
In probate, 2 years or more. You can get the refurbishment on that property reduced from 20% to 5%. What it means is that the tradesperson would buy the materials and then they would fix those materials. They would claim back the 20% VAT, which kind of presupposes that they are VAT registered already and they claim back, but they would charge you at 5%. So instead of paying 20%, you're actually just paying 5%. So you are paying some VAT, which you can't claim back, but at least it's a reduction of 15%. And there are so many different ways of reducing VAT, either as a property investor or a property developer. We're not going to go through all the scenarios on that one.
Okay.
We just one thing about VAT is if you are a service accommodation and your rental income on your service accommodation is above £85,000, what happens then?
Sadly, you're not protected by VAT 1994. You see, I just can't stop mentioning all of the tax legislation. So in VAT 1994, the VAT Act, there is a section that says all these things are exempt from VAT, not 0%, which is what Simon talked about a moment ago, but exempt. And what that means is you can't charge VAT on to someone buying those things. And equally, you can't actually claim back the VAT either if you're buying them from someone because there is no VAT on them. Serviced accommodation, I'm afraid, isn't in that exempt list, whereas residential lets on AST contracts are. So the moment that your furnished holiday let business meeting help sheet 253 conditions hits the 85,000, 12-month, rolling 12-month period, if you like, threshold for VAT, I'm afraid you need to register that business for VAT. And you're going to have to start charging your clients VAT on whatever serviced accommodation rental income you are demanding of them. So that can cause problems if you're not aware of it until the last minute, and suddenly your price seems to hike in comparison to everybody else around you, because I'm afraid VAT does come to the table.
There are many live events that you can register for free. There are 4 events that's showing: HK to UK to help people move from Hong Kong to the UK, the Property Expert Panel. If you're a property investor and property developer, this will be very useful for you. Tax Q&A, if you want to ask proactive tax questions in regards to structures and how to mitigate tax in the future. And finally, UK tax return Q&A, as it says, to deal with questions in relation to your tax returns before you submit it to HMRC. Don't forget that these events are live and will be shown on YouTube the day after. So why not register today, start saving tax tomorrow?